In this video, we're going to be talking about stockbrokers. What purpose do they serve and how do you choose one? Now, so far we've established that stock investing is buying businesses that are well managed and have long-term opportunities for success and buying them at bargain prices. Every transaction that takes place in the stock market requires a buyer and a seller. Now, let's say I want to buy 100 shares of Apple. I need to find someone or some people who are willing to sell me this 100 shares. So where and how am I going to find this person or these people? Well, this is one of the primary functions of a broker, to connect buyers and sellers in the market together. So I want to buy and I put out an order to buy. Someone else wants to sell, puts out an order to sell. The broker looks at both our orders, matches them together, and executes this transaction. So as a buyer, I get to buy the shares. As a seller, the person gets to sell the shares. Everyone is happy. Now, there are a lot of brokers out there who are providing this service of, connecting buyers and sellers, helping us to execute our orders. How do we choose the one that is going to be suitable for our investing? So in this video, I'm going to share with you my 5 criteria for choosing a suitable broker. But before I go into that, just a few quick disclaimers. First of all, I'm only going to be talking about brokers for the stock market. This video is not going to cover Forex or cryptocurrency platforms. Second of all, this video is not sponsored. So what is presented here are my personal opinions on brokers that I have experienced. This is not meant to be an endorsement of any particular product or service. Alright, so the first criteria here is very, very important, and that is regulation. You want to make sure that you're choosing a broker that is regulated. And you want to make sure that your broker is regulated in a major financial center, such as like New York, London, Hong Kong, or Singapore. Now, this is very important because a regulated broker is required to follow certain rules and safeguards and be accountable to an authority. These safeguards are in place to protect you as an individual investor and overall to protect the integrity of the financial system. So let me give you an example. Regulated brokers are required to segregate your assets. That means to say they need to put it into protected custody accounts that is separate from the broker. If anything happens to the broker, if they go bankrupt, they go out of business, your assets cannot be used to pay off the debts of the broker. Your assets are in your name and they are protected. So regulation is in place to protect you, so make sure that you're using a broker that is properly regulated. Now, most, if not all regulators, they allow you to go to their website to actually verify if your broker is regulated by them. So don't just take your broker's word for it. Actually go to your regulator's website to check for yourself if indeed this broker is regulated. The second thing that I look out for is the range of products. Now, you want to make sure that the broker has all the products and services and can give you access to the markets that you need and want to invest in. Now, for example, if this broker only gives you access to Hong Kong market and you want to invest in European businesses, then this broker may not be suitable for you. So make sure that your broker actually has the products and gives you access to the markets that you need. Now, in this channel, I talk about options and how we can use options to enhance our return and manage our risk. So if options is something that you're planning to learn and to go into, then you're going to need a broker that allows you to trade and to invest using options. But here's the thing, some brokers will advertise that they allow options trading. However, their options trading platform may be very, very limited and may not allow for complex option positions. Now, what do I mean by that? Well, there are some option strategies that actually make use of multiple option positions, and these are positions that you have to put on simultaneously. For example, sometimes we want to make use of option spreads, and that involves buying and selling options with different strike prices or different expiration dates. Now, if you're completely new or unfamiliar with options, don't worry about these terms right now. If you're interested to find out more, you can check out some of the other videos on this channel. For the purpose of this video, if your plan is to use complex option positions in the future, you need to use a broker that allows you to put on these trades at the same time. Now, many of these brokers who claim to allow options trading, they don't do that. So you kind of have to put on one position at a time, and that can be very, very tedious to execute and manage. So if you want to do complex option positions, make sure you use a proper brokerage that allows you to do that. The third thing to pay attention to is the fees. Now, earlier we mentioned that the broker serves as the middleman to connect buyers and sellers and to execute the transaction between them. For providing a service such as this, the broker is going to charge some fees. Now, the fees that brokers typically charge have a number of different components to them, but for the purpose of this video, we're just going to lump them together as fees, and we'll break them down in another video. If you're interested in learning more about that, do make sure you are subscribed. Now, generally, you want to make sure that you are not paying too much in broker fees because that can really eat into your returns. So when looking for a broker, make sure you look for one that charges low fees, low commissions. Generally, you don't want to be paying more than like a few dollars for a transaction. Now, the fourth item we're going to be looking at is a bit subjective, and that is the user interface of the brokerage platform. I say this is subjective because beauty is really in the eye of the beholder, and how this works out for you is really up to your own individual preference. Some brokers' platforms are really very simple. They just allow you to buy and sell and move on with life. Some brokerage platforms have, all kinds of data and information that they feed you, which may or may not be something that is relevant for you. So ultimately, this boils down to your own preferences. Whether or not you find this platform easy for you to understand and use, whether or not you need all the features that they offer. Many of these brokers have free trials whereby you can download the software and try around with it yourself. Some of them also may have videos on their website which you can check out and you can take a look at what their platform looks like. And with that information, you can decide for yourself if this platform is something that you would feel comfortable using or if it will meet all of your requirements and your preferences. And now we come to the fifth criteria, which can also be very subjective, and this is reviews and reputation. Now, thanks to the internet and to free speech, you can very easily find user reviews of brokerage platforms. Just like how you find reviews for restaurants. Now, reading these reviews can give you some idea of other users' experience with these brokerage services, and that may be helpful information, as you consider which broker you want to use. But once again, remember that reviews can be very subjective and may not necessarily be truthful. In a way, because of the internet and free speech, there really isn't anything that prevents a broker from paying or incentivizing people to write positive reviews which may not be truthful. So while reviews can provide some helpful information for your consideration, also bear in mind that they are very subjective and not necessarily true. So there we have it, the 5 criteria that I use to choose a broker: regulation, range of products, fees, user interface, reviews, and reputation. Personally, as of now, the primary broker that I'm using is Interactive Brokers, and I've been using them for a number of years. So Interactive Brokers is regulated in the US, in the UK, and in my home country in Singapore. Now, I mostly invest in US stocks using options, and so they have that covered. Interactive Brokers also has, among the lowest fees in the industry, and that's been the case for a very long time now. One thing about Interactive Brokers is that its user interface is notoriously difficult to navigate for new users. However, one thing I do like about it is very customizable, so I can create my own layouts which only present to me the information that I need to make my investing decisions. Lastly, Interactive Brokers has been around since the 1970s, so they are quite an established broker that's been in the business for a pretty long time and generally has very positive reviews. Once again, to point out that this video is not sponsored and is not an endorsement of Interactive Brokers in any way. If you want to find out more about them, please go visit their website, speak to one of their representatives, and decide for yourself if this product is suitable for you. Alright, so that's it for this video. I hope it has given you a good overview of brokerage platforms and how to assess if one might be suitable for you. So do leave a like, comment, or subscribe if you found it to be helpful, and I will see you in the next video.